If you've looked at a property recently, you've probably seen some big promises from developers, but all too often I see developers masquerading as financial advisors, and the numbers they give you just aren't worth the paper they're printed on. Now, I've bought 4 new builds from developers myself, and our company Opus Partners helps over 500 Kiwis a year invest in property. And through that, I've found that some of those developer projections are just way off. And the trouble with that is it's leading real people to make real mistakes that cost them tens of thousands of dollars. Which is why, in this video, I'm going to show you 7 real stories of the sort of tactics that developers are using to suck people in, and how to avoid getting sold something that just doesn't deliver. Hey friends, welcome back to the channel. I'm Ed, an economist and property investor at Opus Partners, and I recently saw a developer saying their properties were a 6% guaranteed rental return. But then when you looked at the fine print, it wasn't a 6% rental return at all. It was more like 4%. So let's say you bought a property for $600,000. 6% means it makes 36 grand a year in rent. But in actual fact, the property only gets something like 24 grand of rent that actually comes from the tenant. The developer was trying to justify the 6% return by saying that they'd give you an extra 12 grand in the first year just to get you up to 6%. Now this is false advertising because it's not a 6% rental return. That extra bit isn't really a return at all. They're just trying to make their properties look better than they really are. And someone, i.e. me, should report them to the Commerce Commission because it's actually not okay. Developers are really good at building homes. And once upon a time, developers marketed their homes as houses. But today, the market's tough. So they're pretending that they're investment pros and marketing their properties as good investments. And so to tackle this, when you see a big claim like a guaranteed return that seems a little bit too good to be true, find the fine print, read it, and make sure the deal really is as good as it seems. And I know that I'm coming on really strong here, but I have seen the negative consequences and I've seen what can go wrong. Another time I saw a developer saying their property would make you a couple of $100 a week if you put it on Airbnb. So I went and I looked at their projections. Now they reckoned that that property would go for $400 a night on Airbnb. And I think that's fine if you're getting like New Year's Eve bookings every single night of the year, but that's not really gonna happen. In reality, that should have been more like $250 a night. But that's actually not the worst thing from those developer forecasts and projections. They actually miscalculated the price of the property itself, and they were the ones selling it. Now, this developer was trying to sell the property without GST. Now, they do that to try and make the property look cheaper, but they miscalculated the tax. The real price was $19,000 more than what they claimed in their financial projections. Now, I actually talked to this company, I pointed out the mistake, and they didn't change it. So I recorded another YouTube video pointing that out. That got some movement with them and they ended up fixing that. But when you buy an investment property, you've got to run the numbers in the right way. And that is the exact reason you use a tool like Opus Plus. Now, this is a free tool that I created for you guys on the channel. You create your free account and then you could run the numbers on any property in New Zealand, and I'll drop a link down in the description. Now, if you've been on the wrong end of a deal, like some of the stories I've talked about, hopefully this one will make you feel a little better because it actually happens to real estate agents too. So I saw that Property Factory were marketing some properties in Wanaka, and this was back in 2020, 2021. And they said that over the last 20 years or so, houses in Wanaka had gone up by just over 8% a year. So naturally, they were saying these properties that they're recommending, they might go up by the same amount. But here's the kicker. The properties they were marketing, the properties they were selling, they weren't even real homes. They were more like hotel units because you couldn't legally live in them long term. You could only stay in there 90 days at a time. So those properties might look like a house, but you can't actually sell that property to a home buyer who's going to live in it, fall in love with it, and then really want to bid the price up. It's basically like comparing apples and bananas. And so what you need to do is you need to check what you're actually buying. And I remember sitting across at lunch with the Property Factory team. Andrew, my business partner, and I, we were there, we took them out for lunch, and he said, Ed's got something to talk to you about, and then he ran off to the bathroom, leaving me there to pull out my spreadsheets and go line by line through them in front of the Property Factory team. And I said to them, guys, this isn't investor friendly. We need to fix some of these assumptions because it's going to be better for your investors and it's going to be better for the overall industry. And it wasn't hostile. but it was honest. And so if you're thinking about buying an apartment, you might hear the developer say, look how much house prices have gone up by. That's why you need to buy this apartment because it's a good investment. But that's not a fair comparison because in this example, you're not buying a house, you're buying an apartment, and that's a totally different ball game. So if you're buying a banana, you need to use banana data. And the reason that developers and real estate agents can get away with this is there is a giant loophole in our laws in New Zealand that are meant to help keep Kiwi investors safe. So if you want to invest in a managed fund or shares with someone like Craig's Investment Partners or Milford, well, that person and that company must be a licensed financial advice provider. And those guys, Craig's Investment Partners, Milford, they definitely are. But when it comes to property, it's different. You can literally sell a property and say it's a good investment without having any financial qualifications. And I think that's wrong. And that is the exact reason that my company, Opus Partners, voluntarily got licensed, because it's the right thing to do. Because in order to get licensed, what you'd need to do is sign up to a code of conduct where you say that you will always put your client, you will always put the investor first, and submit yourself to government oversight. And you can actually check who is licensed or not using the Financial Service Provider Register. Now, this is free to use. You just type in a company's name and you can see if they are licensed to give financial advice or not. And I'll drop that down in the description. And some developers are very clever at exploiting these loopholes in New Zealand's laws. And a good example of that actually is Duval. That's the developer who's currently collapsing. And they used a different loophole to raise money from everyday Kiwis, promising a 10% return. Now, that sounds pretty good, right? But here's where it starts to get very, very murky. They found a loophole in the wholesale investor regime, and that sounds technical, but basically they said, we are going to raise money from investors, but we are only going to target sophisticated wholesale investors. And if they said that, what that meant is they didn't have to follow the normal rules. So they didn't have to give you the usual info, the stuff that real investors need to make a decision. But did Duval just target sophisticated investors who knew the risks? Well, not in my opinion, and not in the opinion of this elderly couple who lost just under $1 million. They haven't seen a cent of that in over 2 years. And this comes back to my point. Developers are good at building houses. They are not investment experts. You know, my brother William, he's an electrician. My other brother Sam, he's a plumber. But if my toilet breaks, I don't call the sparky. If my light doesn't turn on, I don't call the plumber, I call William the electrician. So you've got to use the right person for the right job. And one of the best ways to see who's legit or not in property investing is to check if they're licensed, because that way you know if they've got the skills to give you the advice you're after. But sometimes you can use your own sense to smell a rat. As part of trying to sell to investors, some developers have started creating spreadsheets to run the numbers on properties. And that kind of sounds okay on the surface. But one investor I spoke to had a really weird experience working with a developer. They were looking at buying a property. Then the salesperson started sharing their screen to show them a spreadsheet with the numbers behind the property. Now, the investor naturally wanted to check the numbers and make sure that they were actually correct. And so they asked for a copy of the spreadsheet so they could go through them later on. The developer was cagey as hell. Initially, they said, no, we don't share the spreadsheet. Then they said, oh no, sorry, something happened to the file and we couldn't send it. Well, why won't they send the spreadsheet? If I had to guess, it's probably because they know it's not going to hold up to scrutiny. They want to give the advice without the accountability. And if you're buying a $500,000 asset or spending $1 million on property, 600 grand, whatever it happens to be, how are you supposed to check the numbers without the file? So if somebody shows you some investment numbers, you've got to be able to see how they've been run. For example, if you use Opus Plus, you can dig into the numbers and see how they're created for free, because that way you can change all the inputs and the assumptions so that you are comfortable with those numbers. And I know there's some potential bias here because my company, Opus Partners, helps people buy new build investments. So there is an incentive for me to say, don't listen to developers, listen to me instead. But that's why this is not coming from a place, this video is not coming from a place of use my company. I'm coming from a place of investing in property is one of the biggest financial decisions you will ever make. This is your financial future, and so you want someone who actually knows what they're doing. Now, if a developer watches this video and says, that's it, we're gonna get licensed, then that is a win for me, even though it creates a competitor for my business. But it's not just developers trying to skirt around the rules. Even people who are recently out of jail are having a go. So David Blake started a business called Investment Builder NZ a few years ago. And he was trying to help people invest, which is generally a good thing. Now, David couldn't legally start a company, which is why I called it a business before, because he'd been bankrupt 3 times and is banned from being the director or promoter of a company. So what did he do? Well, in my view, he started operating outside the lines as a sole operator. Now, no investing is completely safe, but you can take some steps to try and protect yourself. And I think there are 3 things to look out for. First of all, if someone is giving financial advice, if they're talking about properties and investments, are they a licensed financial advisor? Are they on the Financial Service Providers Register? If not, that is a red flag for me. If you're buying a house, are they on the Real Estate Agent Register? If they're not, you don't get the same protections from the Real Estate Authority, the REA. And the third thing is, are they actually a real company on the company's register? And I know you might think, Ed, you're part of Opus Partners. You recommend properties. Aren't your people just salespeople? And I think that is a fair question, because if I wind back the clock 10 years, a decade ago, most property companies probably were sales first. And that is the exact reason why we decided to get licensed. Simple as that. Now, again, I'm not saying that you have to choose us, but before you act on any property investment advice, you should check those 3 registers. And my challenge to developers is, if you want to give financial advice, go and get licensed. Do the work to show that you're putting investors first. And I just saw the most hilarious example of this over the last few weeks. Just last week, I saw that Mike Greer, a very well-known and very well-respected developer, tried to launch Mike Greer Property Partners. Now, this is a company trying to market Mike Greer properties to investors. Now, you'd expect that as a new company, their information would be correct. But not only was their investment information not correct, and a display of complete honesty in their disclaimer, they said that they're not financial advisors, which is good to disclaim that, but they also said that they recommend that you talk to an independent financial advisor and that their content is to promote Mike Greer Homes products, and they take no responsibility if it doesn't work out as an investment. And the most hilarious thing is that just a few weeks after launching, they've already taken their website down. Now, each of these stories tells you one thing. If someone's great at building houses, let them build houses, but don't let them write your investment plan. But just knowing who's registered is not enough, because some developers still know how to twist the numbers and make a bad deal look great. So if you want to know how to spot the red flags before it's too late, watch this video next, where I show you exactly how to investigate any property developer properly.